Hello friends, this is Hatim Rampurawala, and in this video we will revise essay 550 related parties. Okay, so it's been divided into two parts. That is, first is three parts we can say. First is meaning of the related party, second auditor's responsibility in relation to the related party, and third is auditor's duty. So we'll first cover the definition meaning of the related party. So related party, either the related party is defined in the applicable as per the applicable financial reporting framework AS 18, or say in case of the Ind AS 24, or where the applicable financial reporting framework establishes the minimal or no related party requirements. So either if the financial FRF either establishes minimal, that is minimal, low, less, or no reporting requirement, then then who will be the related party basically. So the standard has defined, that is the person, entity having the control or the significant influence over the reporting entity, the entity over which the reporting entity has the control of the significant influence, that is the holding has the control of subsidiary is that is, first is person, entity having control or significance over the reporting entity, then reporting entity has the control, significance, influence over the entity, and the entity under the common control with the reporting entity. So any entity which is in the common control with the reporting entity through first common controlling ownership. So there is an entity, there is a third entity who is commonly controlling both the entity, so the other two will be related parties. So common controlling ownership, second ownership owner who are close family member, and the common key management. So the other common entity under the common control with the reporting entity through, there are three relations in this, that is control, common controlling ownership, then the key management, common key management, and owner who are close family member. Then this was simple. Then we'll move on to the auditor's responsibility in relation to the related party. So auditor's responsibility has been divided into basically two, that is general responsibilities and the specific responsibility. General responsibility is in relation where means it has to follow in every entity, in every case, basically by the auditor. And specific is like that if the FRF has prescribed some additional responsibility of the auditor in specific matter, in specific relation, then it is a specific responsibility of the auditor. So we'll see first general responsibility. First, obtain an understanding of the related party relationships and the transaction. Why we are obtaining the related party relationship and transaction? First, that is it is an auditor's responsibility to recognize the fraud risk factor and to conclude whether the financial statement in so far as they are affected by those of the relationships and the transaction achieve. So the financial statement basically which are affected by the related party relationships and the transaction are are true and fair presentation, achieves true and fair presentation, that is basically they are presented in a true and fair manner, and second are not misleading. So first, to recognize the fraud risk factor and to conclude that the financial statement insofar as they are affected by those of the relationships and the transaction achieve the true and the fair presentation and not misleading. Then the specific FRF established accounting and disclosure requirement. First, perform the audit procedure to identify, assess, and response to the risk of material misstatement. So identify, assess is basically SA 315, and response to risk of material misstatement is 330. So auditor has to perform the audit procedure to identify, assess, and perform. Then second point is in relation to it has been properly accounted and disclosed. See what they have given as per FRF. What they have given is evaluate whether the identified related party relationships and the transactions. So our auditor will evaluate whether the identified, which are known, which are been those related party relationship and transaction which the management has indicated to the auditor, evaluate whether the identified related party relationships and the transaction has been appropriately accounted for and disclosed as per FRF. So first is perform audit procedure. Second, he will check that the identified related party relationships and the transaction have been appropriately accounted for and disclosed as per FRF. Third, he will obtain written representation. If means these are the requirements or the responsibility specific requirement or responsibility as per FRF. So third is obtain written representation from the management TCWG with respect to first disclosure to the auditor. Obtain WR from management TCWG with respect to the disclosure to auditor the identity of the related party of which they are aware. Okay, actually sorry, what I am reading I am not getting. I am getting, but okay, sorry. We'll continue properly. Obtain the WR from the management with respect to. So okay, we will obtain the written representation in relation to two things they have given. First, that the related party that management has disclosed all the related party relationships and transactions which they are aware of, and second is that they have properly accounted and disclosed all the transactions and all the relationships as per FRF. See, obtain the WR from the management and TCWG with respect to disclosure to the auditor the identified related party of which they are aware of, and appropriately account and disclosure as per applicable as per the FRF. Then there comes auditor's duty. It's been divided as risk assessment procedure and response to the assessed risk. Response to the assessed risk, these three points that are of most importance. Okay, so first we'll basically see risk assessment procedure. In risk assessment procedure, auditor, first point is understanding the entities related party relationships and the transaction. So in understanding the entity related party relationship and transaction, what auditor will do? First, auditor to inquire of the management regarding the identity of the related party and change from the prior period, nature of the relationships between the entity and the reporting and the related party, and type and the purpose of the transaction with the related party. Wait a second. Okay. B point, obtain an understanding whether the management has established the control. So they will obtain an understanding that the management has established the control to first identify, account for and disclose the related party relationships and the transaction. Second, authorize and approve the significant transaction with the related party. Third, authorize and approve significant transaction outside the entity's normal course of the business. So what you have seen in the understanding, auditor to inquire of the management, first to identity of the related party, change from the prior period, nature of the relationship between the entity and the report, the related party, type and the purpose of the transaction with the related party. Obtain an understanding whether the management has established the control to identify, account and disclose the related party relationships and the transaction. Authorize and approve the significant transaction with the related party. So first, identify, account for and disclose the related party relationship and transaction. Authorize and approve, 2 points are there. Authorize and approve significant transaction with related party. Authorize and approve significant transaction outside the entity's normal course of business. In relation to the third point, we will see in the further point as well, and in response to risk assessment, this second point is also identified significant related party transaction outside the entity's normal course of the business. So in that, what will be the response to the assessed risk? Okay, so we are done with the first one, understanding the entity. Second, maintaining alertness, that is auditor has to be basically apply the professional practicism concept while auditing. Maintain the alertness for the related party information when reviewing the records and the documents. So when checking the records and document, inspecting, vouching, auditor has to be alert in related to the related party information. First point, auditor to remain alert when inspecting the records, that is when checking the records with respect to the information indicating existence of the related party relationships and the transaction. That is, while inspecting, he get to know with respect to indicate the transactions information indicating the related party relationships and the transactions, relationship or transaction not previously identified or disclosed. So he had to be alert in relation to those information indicating the what we can say, existence of the related party relationships and the transaction which are not been disclosed, which are not been previously identified or disclosed. Basically, they are not been informed by the management to the auditor. Second, if an auditor identifies the significant transactions outside the entity's normal course of the business, if they identify any transaction outside the normal course, then they will first do is inquire of the management about the nature of the transaction and whether the related party could be involved. So we will inquire, if they identify any transaction outside the normal course, they will inquire of the management that whether they will first inquire of the management that is the nature of the transaction which has been taken outside the course of the normal business activity, nature of the transaction, and the related party, whether the related party would be involved. Then possible sources of the identification of the related party information. So how we will identify the related party information? There are various sources, and I have prepared a keyword also for this. It is like there are two I in this, I2, C3, C3 and S3. I2, C3, S3. 2I means income tax return, internal audit report. C3, that is contract with management, contract outside the normal course of the business, and contract renegotiated. So what we have read till now is income tax return, internal audit, 2 I's. 3 C's, that is contract with the management, contract renegotiated, and contract outside the normal course of the business. Then 3S, that is shareholder register, statement of conflict of interest. See, in relation to shareholder, we find that there is a conflict of interest point, related point, exactly not that, but just to relate, shareholder register and statement of conflict of interest. And the third S is for specific invoice from the advisor. Then the remaining are 3, that is register of investment, and then the remaining 3 will be, keyword will be RIL, Reliance Industrial, not Reliance Industrial Limited, but R is register of investment, I is information supplied to the regulatories, from that we can identify, and L is life insurance policies. So I3, C3, I2, C3, S3 and RIL. Then identifying the fraud risk factor, domination of the management by the single person or the small group without compensating the control is the fraud risk factor. So basically, if there is a domination of the management by the single person or the group of the small group basically without compensating control is a fraud risk factor. So how will identify the dominant influence? That is, first there are various indicators. Basically they have given 4. First is related party has vetoed significant business decision taken by the management or the TCWG. So they have obstructed, basically they have created an obstacle, or they have stopped, basically they have vetoed veto power, we say basically they have vetoed significant business decision taken by the management or the TCWG. Significant transaction are referred to the related party, means significant transaction which are referred to the related party for the final approval. So final related party is doing the final approval. Then note or the little debate, third point, no or little debate among the management of the TCWG regarding the business proposal initiated by the related party. So there is no negotiation. If related party initiate the transaction, they will complete the transaction. And the fourth point, transaction involving the related party are rarely independently reviewed or approved. So transaction involving related party, so which all transaction which involve related party are been rarely independently reviewed or approved. So basically they have been concluded by the related party only. So which are 4 indicators? First, related party has vetoed significant business decision taken by the management of the TCWG. Second, means they have vetoed the transaction, vetoed the significant business decision. Second, the related party approval is the final approval. Then there is no or little debate among the management of TCWG regarding the business approval initiated by the related party, and transaction involving the related party are rarely independently reviewed. So we are done with this, and we'll quickly cover this response to the assessed risk as well. First is, see, this all 3 can be an individual question, 1, 2 and 3. So we'll quickly do, but at the same time we will ensure that we are getting as well. First, identification of the unidentified, undisclosed related party or the related party transaction. So if the auditor identifies any of the unidentified, means previously they were not identified, unidentified or undisclosed related party or related party transaction, then what auditor will do? That is, first, communicate with the other members of the engagement team. Second, request the management to identify the transaction with the newly identified transaction. So they will what they will do, request the management to identify, now give the information, that is to identify the transaction with the newly identified related party means what all are the new transaction with these new party. For instance, a new XYZ Limited has been identified by the auditor, which was not earlier identified, which is basically a newly identified related party. So they will request the management to identify the transactions with them. Then third is inquire reasons from the management. Failure to, so they will ask for the reason that for the failure to identify the related party or the disclose related party relationships and the transaction. So how they have failed to identify related party or related party, disclose related party relationships or the transaction. Then reconsider the risk that the other unidentified related party or the undisclosed related party transaction may exist. And then audit have to also consider that there may be instances that that reconsider the risk. There is a risk basically that the other unidentified related party or the undisclosed related party may exist, and if non-disclosure, that this non-disclosure basically appears to be intentional, then evaluate the implication for the audit. So which point 5 point we have seen that first, communicate to the engagement team, other members of engagement team, request the management to identify the transaction with a newly identified related party. Then inquire the reasons from the management for the failure to identify the related party. So we will inquire the reason. Fourth, reconsider the risk that the other unidentified related party or the undisclosed related party transaction may exist, and if the non-disclosure appears intentional, evaluate the implication for the audit. So if that basically appears to be intentional, then evaluate the implications for the audit. Then second is identified. This has been a little long, it has been already 16 minutes 17 minutes, it will go till approx 20 minutes. We'll complete this too. Identified significant related party transactions outside the entity's normal course of the business. Inspect underlying contract to evaluate the business rationale. So if the auditor has identified, second point is that is if the auditor has identified the transaction which is outside the entity's normal course of the business, then inspect the underlying contract to evaluate the business rationale. So he will inspect what was the underlying contract to evaluate the business rationale. Then examine the terms on which the transaction take place. He collect the evidence with respect to the approval and the authorization of the transaction. Then collect the evidence for the appropriate accounting and the disclosure in compliance with the FRF. So collect evidence with respect to the approval and authorization of the transaction. Collect evidence for the appropriate accounting and the disclosure in compliance with FRF. Appropriate accounting and disclosure in compliance with FRF. Then the last point, assertions that related parties were conducted on the arm's length price. Assertions that the related party transaction were conducted at the arm's length price. So first, collect sufficient appropriate audit evidence with respect to the management assertions of the arm's length price. So we'll first collect the sufficient appropriate audit evidence of the management assertions of the arm's length price. Then compare the transaction, that management assertion transaction, basically compare the transaction with the price for identical transaction prevailing in the ordinary course of the business. Then engage expert to determine the value. So what we will do, we will first obtain evidence from the management assertions of the arm's length price, then we will compare with the identical transaction prevailing in the ordinary course of the business, and the auditor can also engage the expert to determine the market value. So with this we cover 550. We are done this in 18-19 minutes. Thank you for watching the video.